Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Friday, September 28th. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we saw that the market rallied after the Fed cut the discount rate and the Fed funds rate, and we were left with the SPX, the Dow, and the Comp trading above former resistance, and the RUT trading right at resistance. And I left that video basically saying it wouldn't surprise me to see the SPX pull back, but as long as it held above that resistance zone, the former resistance zone, that would be a constructive sign to me. When we turn to this week's charts, we see not really much of a pullback even. The SPX had a small little dip there, but remained well above that former resistance, which should now be support. In the blog, I've been talking about the sort of boring action that we've seen in the broad market indices, where we've just basically seen sort of a sideways consolidation. And in the blog, I've mentioned that I view that as a constructive sign. Basically, what that is, it's another form of a way for an index to work off an overbought condition. Last week, I touched on the indices had pushed into overbought conditions. Typically, you'll see a pullback as a result, but another way that can work itself off is just to move sideways, and basically that gives the momentum a chance to regather and buyers can step back in again. In terms of what we see from the other broad market indices, the Dow, it's consolidating just like the SPX. It's actually near that peak, so that's a potential breakout waiting to happen. You look at the Comp, you've got the same thing going on there. The Comp actually hasn't been consolidating, is more just sort of drifting higher. The RUT, struggling with this resistance zone, but I wouldn't call this a bearish pattern yet. I mean, you've got the index above its 50-day moving average. If we hold there much longer, that 50-day is going to start to curl up. Basically, you'd like to see a break above there. Hasn't happened yet, but I wouldn't say I'm all too worried about that pattern right there. Again, these lows down here are the main thing to keep in mind. As far as overall takeaways, I think the action remains constructive. Again, we're above short-term support, so if we do see a pullback, that's a level to keep an eye on. We did have Alan Greenspan out with his bearish talk. That was out again this morning, talking, slight increase in his view of a recession, still less than 50%. I don't know how much of an impact that has. Didn't really seem to do much to the market, so hopefully they just continue to ignore him. But as far as the charts go, again, we could see a little bit of wiggle room, a pullback to support, but those short-term support levels are what I'm keeping an eye on, as well as the recent peaks. So, as always, stay tuned to the blog for further updates, and have a great weekend.